In this video, we're going to talk about whether you should lock in your variable rate or go with a fixed. Hi, I'm Shane Little with the Richards Group Remax Hallmark. I'm a real estate agent that works in the East End. Today, we're going to be talking to Angie Alvarez, who is a mortgage agent with Capital Home Lending. She funds a lot of our own deals and works with the majority of our clients as well. We're going to talk about the current rate environment and what you should do if you're in a variable and a fixed rate, and look back on the past trends. If you get value from this video, please do like and subscribe, smash that button. And if you want to chat further about anything we discussed here today, feel free to send me an email or send Angie an email as well. We'll put her information down below. So I'm here with Angie Alvarez from Capital Home Lending. She's a mortgage agent that we actually use to fund most of our own deals, and a lot of our clients work with her as well. So we're going to just chat right now about what you're seeing in the mortgage market. Everybody's talking about rates. So what's going on?
Yes. Well, thank you for having me, first of all. Yeah. Yes, this is at the top of everybody's mind. Rates are obviously, as we know, have increased quite substantially over the last few months. Coming in from a historical low rate environment, this is what people are looking at right now. The best advice that I could give is absolutely do not panic. Yeah. What goes up must come down. So we're seeing fixed rates on the rise quite rapidly. Yep. But I predict that they will settle once the inflation, we can combat inflation a little bit more, we as an economy, right? The central bank. And that's really what they're trying to do right now. So when you hear and see all of these increases on prime rate, prime only doesn't have anywhere to go but up. Right. So prime is going up right now, but we knew this a couple of years ago. We did prepare our clients that to be prepared for fluctuation, and that's what we're seeing right now. Yep. So the next rate increase announcement is June 1st, and we're probably going to see an increase. But what goes up must come down. So anybody who had a variable rate, 2 years ago, who was maybe at prime -1, they were riding this very low rate for the last 2 years. Now moving forward, they're going to have to embrace the fluctuations. We knew that at some point it was going to come back, or it was going to go up rather, and then eventually it will come back down. That could be 18 to 24 months, we don't know, but it will come down. So my suggestion is to definitely ride out the variable. Yep. I think that the central bank right now is building in a buffer so that they can stimulate the rates later on and cut accordingly. It's a long-term commitment, right? When you enter into a mortgage or you buy a home, you're not just looking at what are the rates today or tomorrow. You're in this for the next 20 to 30 years. So you're just trying to look at your financial situation and make the best choice for yourself. So yes, we're in a very high fixed rate environment. So maybe let's look at the variable. This is why the variable is is very popular right now. Yep.
And if you are in a variable, what are your options if you want to maybe manage your cash flow from that perspective?
So if you're in a variable rate, there are ways that you can take advantage of a low rate. And I don't know if I mentioned this before, but if you are one of those people that did get prime -1, your rate right now would be 3.2, which is prime, -1 is 2.2%. So why would you lock into 4.5, where rates are right now, when you are still riding the tail of this super low rate that you have, right? Yep. So back to your question, there are some banks that allow you to have a fixed variable payment. So if you want to take advantage of low rates, but you're concerned for cash flow, and you want to keep your payment static, then there are certain lenders that you can go to that won't change your payment. They'll just change the allocation of interest and principal. Okay. I don't love this because it extends their amortization and they're essentially paying more interest to the bank. But it is an option if somebody wants to take advantage of a low rate variable and not have to worry about their payments increasing or decreasing as prime fluctuates.
And is that something that you have to lock into? If you say, I want to keep my payments at this amount, you have to do that for the term of the loan, or is that something you can change maybe down the road if you want to start having more a different payment schedule?
Some banks only allow you to have a fixed payment, but what you can do to offset that is take advantage of your prepayment privilege. So if if prime has gone up, then I suggest increasing your payment so that the allocation remains the same, so that it's constant.
Yeah. Amazing. And we talked a little bit before we were on the camera, and I thought you said some interesting things about where we'd been at in the past 12 to 15 years.
Yes.
So if we could put that into perspective for where we're at now, and maybe use like looking back as a bit of a window into what's going to happen next.
Absolutely. So looking back at the history of prime rate, okay, from 2008 to 2009, we know we were in a financial crisis. From 2010 to 2015, prime was at 3%.
Yep.
It stayed there for 5 years. Okay, so while the economy was recovering, to continue to stimulate it, that's what the central bank decided what was best. From 2015 to 17, so later on in 2017, we saw prime go up to 3.2, and then in 2018, it went up to 3.95. Okay, this is pre-pandemic. 3.95 is the highest it's been in the last 10 years. Then obviously in pandemic, we went right down to 2.45, and we've had that for the last 2 years. Now we're at 3.2, where we were in 2017. Hopefully my dates are spot on. Yeah. But just to give you an idea, if you look at that history, prime was constant. It came down a little bit. It went back up. It's come right back down. And at 2.45, where it was at the bottom, now we're seeing it at 3.2. We might see it go back to 3.95. We might see it at 4%. But you can see the trend that what goes up will come down, right? What goes up must come down. It will come down eventually. So I think that, yes, in the next couple of years, we're going to see that trend where they start coming back down. And I think that the most important thing is that people don't panic, and they don't, those that are in a variable, don't panic to lock in, because you're going to be locking in at this rate environment. Whereas, when fixed rates do eventually come down, maybe you decide that you want to lock in at that point, or maybe you don't at all and you just ride out the variable because it is a long-term commitment. So yeah, and locking in too, just to keep in mind for those people out there, when you're locking in, if anything changes in the next few years, you're committed to that mortgage and that bank's penalty calculations. When you're in a fixed rate, it can be quite astronomical, versus a variable, it's 3 months interest.
Okay, so that's important to know if you're looking to sell in the next 3 to 5 years.
Absolutely.
Yeah. Okay. And I think we'll end by, what advice would you have to potential buyers that are looking in the market right now? What would you tell them?
I would tell them that the most important thing is the house that you're buying, right? I think that, if you're ready to buy a home, if you're doing this for an investment, the time is always now. You're going to try and get the best rate at the time, and you talk to your mortgage professional and strategize whether that be a variable, whether that be a fix, and what time to do that. So I think just focus on, if you're ready to buy a home, and then make sure you're talking to the right people, make sure that you're talking about your rates and your terms, because they're all equally important. And just not to panic and not to worry and be fearful. And the time is always now. There's no perfect time to buy a house. You just it has to be right for you.
Amazing. Angie, thanks so much.
My pleasure. Thanks for having me.
Yeah. Thanks again for watching. Please, if you did get value from this video, like and subscribe. You can also follow me on Instagram at shane.easttorealestate. And on Facebook as well. Send me an email if you want to chat about anything that you heard today, or if you have any questions about the market. And if you want to book an appointment with me, click the link down below.